Hey guys, what's up? Welcome back to another video. Today I'm going to be doing a trade breakdown from something that I just took yesterday. So it's super clean. And I want to make something very clear real quick. Like, yes, I'm showing the trades that are going to perform well and look well, right? These are going to be the trades that I can understand and explain to you guys the easiest. I do post my losers and my other break-even trades on my Instagram story, so go ahead and check those out whenever you get a chance. But I don't want to make it a little confusing, like I'm only showing my winners on YouTube, because it may seem like that, especially when I'm doing these trade breakdowns. So let's just jump into it. I have some really good stuff I want to explain to this, and it's going to look great. So let's get to it. All right, so here's just an overview of the entire trade. From start to finish, you can see where my entry was for both positions, and where my exit was, where my stop loss was. So I'm gonna go take this back into replay and show you guys exactly what my analysis was and what I was looking for before the market even opened. So let me go back into replay real quick. So the day starts right around 6:30. That is where I am planning on doing my initial analysis for the day, because I wanna see what the trends have been over the past couple hours before the Asia session opens, right? So I'm coming in and I'm sitting down on my computer, and right around 6:45, 6:30, that's when I first sit down on my computer. And what I'm seeing here is we're in somewhat of an uptrend on the lower time frame. Here on the higher time frames, we can see, actually it's already pushing it up, but let me replay it back one more bar. We can see we're at a low for the higher time frames, right? So the 2 hour, we are at a low. The 1 hour, we are at a low position. 30 minute, we are also at a low, right? We're going to the downside. 15 minute, we are also at a low, and we're starting to somewhat form a double bottom here. So these are like little things that are going on in my head as I'm sitting down in front of my computer. Then we go to the 5 minute time frame, and we can start to just wait, right? We're not here to force anything the moment we sit down at our computer. We want to wait 5, 10, 15, 30 minutes before the Asia session opens to see what the market is doing and how can we analyze this to have a edge in our market, right? So here the 5 minutes going, so we're going to just sit down and we're simply waiting, right? We're just simply waiting to see what happens. We can see the market is starting to trend upwards, and we're starting to form a fairly solid area of interest. And we can also see it is starting to consolidate also around our EMA level. So we have a nice little kind of area of interest down here. We're going to wait a little bit more. We start to see somewhat of a breakout, right? Breaking above our area of interest, breaking above our 5 minute EMA. So starting to build some confluences to the upside. And we don't want to rush it again, right? We're still waiting for somewhat of a reversal to happen so we can look into our entry position. But so far, we're seeing a lot of bullish movements, right? So now in my mind, I'm thinking to myself, tonight is going to be a bullish move. We need to be looking for buy opportunities. We're not going to be looking for sell opportunities simply because the market is shifting upwards and we want to follow the flow and follow the trend. So we continue and we wait. We can see a huge push to the upside, and actually, I'll go down to the 1 minute time frame so it's a little bit easier. But right here is where we start to wonder, where's our entry position going to be? So I take out the Fibonacci tool. This is my favorite tool, and I tell you guys to use this all the time, right? So we can put our Fibonacci from the bottom of the push all the way up to the top of the push. And I always tell you guys that the 0.5 to the 0.618 zone is the cleanest golden zone you will get for your entry positions. It is the most likely area of where price is going to reach and then continue the trend upwards or downwards, whichever direction you're looking into. So the 0.5, 0.618 zone, when you draw your Fibonacci sequence like this is going to be your golden area where you want to be looking for entries. We could also see, since we're way above our EMA, we're also looking for a retracement to retap into our EMA and into some of our supply zones, our area of interest that we have drawn up here. So little things like that are starting to build up, right? We're building our list of confluences. So let me go down to the 1 minute time frame to make it a little bit neater for you guys. I'll bring it back a couple bars just because it went by a little fast. So essentially here I have this drawn up, right? I know Asia session is about to open 7 a.m. or 7 p.m. My mistake. So 7 p.m. I know Asia session is about to open, and we're going to get hit with a lot of volume. So of course, in my mind, I know a lot of volume's coming into play. I have my buy position set right here. We're going to ignore this one for now, right? This little position, I'll explain in a second, but this is our main position, right? This main position is what we want to look for. This is what we want. So I have my entry set right near the 0.618 zone, a little bit above it, because I want to use this kind of smaller 1 minute area of interest kind of market structure point as support as well to continue to the upside. We can see as it does also reach our entry, that's where it's going to meet our 1 minute EMA, right? So we're building a lot of high probability confluences right within our golden zone on market structure, EMA, area of interest. And now what about stop loss? Where am I going to put my stop loss? I think it's pretty clear here where you want to put your stop loss. You're putting it below a big chunk of market structure where price has to break through in order to push to the downside. So we want to cover a lot of our losses. We're covering our area of interest. We're covering our EMA. We're covering market structure. We're covering shift of structure, right? So if it does shift to the downside, there's a lot of momentum that is needed to push it downwards. So we're covering a lot that we need. Some might say, why don't you put your stop loss here, right? You could almost half your stop loss at 4 pips, still cover this one little bit lower end of the market structure on the 1 minute time frame, and you can increase your odds so much more now to a 2.75 compared to a 1.4. But the thing is, like, 4 pips is very, very little, right? Especially when there's a lot of momentum in the market and you're in the beginning of the session. That 4 pips can be ran through like within a quarter of a second. You could see literally here, I could show you guys right here, right? Within 1 minute, we go through almost 8 to 10 pips of movement. So in order to just save myself that little bit of breathing room, I always like to keep between an 8 and 12 pip stop loss. That's what I've noticed works best for me. If you guys want to be a little bit riskier, then go ahead. You could shorten your stop loss. But we can see here that that would have actually really hurt you, right? If you shortened your stop loss to just cover the exact amount below the area of interest and the exact amount below the market structure point, you would have been wicked out into your stop loss with price to only perfectly reject off of that point and continue to the upside. Right? You would have been very, very sad here, right? So we can see price action continues and it starts to boom to the upside. So that's why I always like to leave at least 8 to 12 pips for my stop loss. Now we can see our 1 minute EMA is being very well respected. We're getting a 1 minute shift of structure here as well. We can see it happening right here, right? We shift to the downside on the 1 minute shift of structure, breaking this lower market structure point, and we're starting to trend downwards, but we break through above this point. This is where you need to have pattern recognition in your mind very quick on the spot. You need to understand that these things will happen very fast, and you need to understand that there's a head and shoulders developing right in front of your eyes, and there's a potential to add in another position, right? So if price does come back down here, then it can continue to the upside, creating a nice reverse head and shoulders pattern, shifting momentum from sells to buys. So there's a lot of potential for another entry here, and that is exactly what I was looking for. We bring out our Fibonacci tool once again. We go from the bottom of the push up to the top of the push. And once again, we can see we're using almost the same confluences that we did for our main position on our side position, right? We have our golden zone on the 1 minute shift of structure here, going from the bottom of the push to the top of the push. In between the 0.5 and the 0.618 zone, we have a very small, I mean, if you kind of want to see it, but very small area of interest here with that 1 minute demand. Then we also have our 1 minute EMA starting to rise up as well. And by the time price action reaches our entry right here, our 1 minute EMA will be touching it as well. So it's just a lot of confluences that, again, are pushing our price to the upside. So we want to have a potential another entry position here in order to get in. And what about the stop loss on this position? Where should I put it? There's 2 main things that I like to think about here. There's one play that I like to do is if you're getting into an entry position, you're going to be adding more risk, of course. And how much risk do you want to do? I normally only do an extra 0.5%. If my main position is 1%, then my smaller position is 0.5% because I don't want to risk significantly more on a smaller position compared to my main position. The main position is what I'm worried about the most. So if I even hit break even on my small position, but I win on my big position, then I don't really care. You know what I mean? Like that, I've just cared about my main position. That's the most important to me. That's where most of my money is, and that's where most of my analysis is, the big analysis. So I like to put my stop loss either at the same exact level as my big position stop loss. And what this secures me is that if this hits my stop loss, then I'm losing 1.5% for the day and I'm done, right? I'm not going to be looking for any other positions. I'm completely done for the day. Or the other thing that I like to do is I want to keep my stop loss a little bit shorter for whatever the reason may be. In this case, I was keeping it below the market structure point right here. Pretty obvious, right? We can see a lot of consolidation, our EMA. So we're covering a big chunk of market structure here. So I put my stop loss below this point, also covering a decent amount of our area of interest. So in that case, I wanted to keep my stop loss a little bit shorter. So what I did, by keeping my stop loss shorter, I also shortened my main position stop loss. I was reducing my risk all the way up until here around 3.6 pips stop loss. Now, what does this do? If price decides to head to the downside completely and hit both of these stop losses at this exact level, then I'm only losing 1% because I'm risking 0.5% on my small position, and I essentially reduced my risk on my main position by 0.5%, if anything, a little bit more. So now if I hit my stop loss, I'm only losing 1% compared to keeping a bigger stop loss, which I potentially lose 1.5%. So that is the reason why I kept my stop loss a little bit shorter. I wanted to reduce my risk as well, so I shortened my main position stop loss. All in total, keeping really good risk management and a good mental capacity during this trade. Luckily though, that was not the case where we didn't really have to worry about it hitting our stop loss. So we can see price action continues to fall here. Boom, we get into our entry on our smaller position, right? Now, I think it's pretty clear. We can see the head and shoulders very clearly, right? We have a left head and then the right shoulder, left shoulder, right shoulder. And then we just continue to the upside. And that's basically it, right? As soon as I see this 1 minute engulfing candle, I'm very confident that the trade is going to continue to our TP. So I just let it ride, right? I have my TP set at the exact same point for both trades, 11 pips for the main position, 8.7 for the smaller position. And there we go. It just smashes our TP straight like that. And I guess I could take a quick brief moment to say why was my TP set here? If you look back to the left of the chart, it's pretty obvious. We have lots of resistance points here, right? There's a lot of resistance here that we want to make sure that if it does reach this point, we are out of the position. That is a high risk trade if we're trying to break above it and hope that it continues for maybe another 10, 20 pips. Very high risk, high reward, but we're not going for those types of trades. You know, my strategy is revolved around 70-ish to 80% win rate, and we're shooting for about 1.5 risk to reward ratio. So that's the goal for me. That was perfect for this trade. 1.37 is I'm happy enough. 1.47, I'm happy enough with both of those trades. And we got wicked into our take profit perfectly. And we can see it was actually a really good take profit because for the next maybe hour or so, price decided to tank. So very, very convenient that we were able to get out of this position before price started to head to the downside. But yeah, overall, a really, really nice trade. Followed my plan exactly. We used the Fibonacci tool very precisely. We used the EMA very precisely. We were using our knowledge of area of interests, supply and demand very well to just really make a high probability trade for us to create some great profits. So overall, beautiful trade, and I hope you guys learned a lot from this. Thank you guys so much for watching. I really appreciate you staying all the way to the end. I hope you guys enjoyed and learned a little bit more from this strategy and from this breakdown. So if you have any questions, feel free to hit me up in the comment section down below, or you could hit me on my Instagram. I'll be more than happy to reply to all your DMs. But anyways, hope you have a great day and good luck trading this week. I'll see you guys in the next video. Peace.